it's super hard to employ 1,000 people in a day in the United States. Like, I don't think any company ever added 1,000 employees in a day, but you can add 1,000 people contributing for crypto to a crypto-based project in a day easily.
You're listening to the Unstoppable Podcast, the go-to place for everyone to learn about the latest innovations in Web3, NFTs, and the decentralized web. Welcome to the metaverse. GM, welcome to the Unstoppable Podcast. My name is Josh Gordon. I'm your host, and I'm joined by a great guest today, Yury Lifshits, CEO of SuperDAO. We've got an interesting episode lined up about decentralized autonomous organizations, what they mean, why they're important, and really the future outlook that Yury envisions. Now, we put out a tweet a couple weeks ago on the Unstoppable Domains Twitter and asked all of our followers what they were interested in learning more about on this podcast. And actually, 42% responded saying DAOs. So Yury, thank you for joining today. I think this conversation is really going to be educational and insightful for a lot of the listeners of the pod. How you doing?
Doing great. Excited to be on the show.
Sweet. Well, I'd just like to dive right on in and get to know you a little bit better, and then we can talk about DAOs and like the vision you have for them. Can you walk us through how you got into crypto and how that led you to founding SuperDAO?
Awesome. Yeah, so I started my career as a mathematician and computer scientist and was teaching cryptography at graduate and undergraduate programs covering topics like zero-knowledge proofs and Byzantine agreements back in 2005, 2006, before Bitcoin was invented. So I kind of was in crypto before crypto was a thing. But after that, spent another 10 years in Web2, building companies there, but primarily around communities. So bringing people together, primarily through things like chats and co-working spaces and events, been a big thread in my life. And now finally I'm going back to crypto and open source my last company, which was a direct competitor to Discord, messenger for communities, and now full on crypto train and building a platform for DAOs.
That's awesome. So you were really thinking about some of the foundational technological elements of crypto before we were thinking about it from a currency standpoint, before we were thinking about it from a how do you start an organization standpoint. So I feel like some of those concepts are really deep rooted inside your philosophy.
I would never imagine that to be so important. Back then it felt like beautiful mathematical theorems with no applications.
And now we have thousands of applications, right?
Yep.
That's pretty interesting. And I really appreciate that you have that technological background. Can you start and give us a baseline on what a DAO really is and why it's important for some of our listeners who may not have such a deep understanding of the DAO ecosystem we have today?
Yeah, sure. There are two definitions and they are in a serious conflict against each other. So the first definition is more narrow definition and it is the original definition. It is DAO as decentralized autonomous organization. And here decentralized means that it's an organization that creates some value, but there is not a single person or a single core group of people who can be pinpointed and say, if those people stopped working, the DAO stopped creating value. And the autonomous means that there are some rules encoded on the blockchain in form of software, and those rules override the human control. And so the organization can evolve and make serious decisions and operate with a kind of software-led way. And the original DAOs were set up that way primarily as a response to security law. So there were some token-based projects, and they need to bypass the definition of security as an investment contract where you expect profits by the effort of others. And in this case, you say, hey, you buy the tokens, but they are more of utility or commodity because there is no one actually specifically responsible to make the tokens be more valuable over time. And so that was a legal defense structure. But eventually people start seeing that there was actually a lot of benefits to become decentralized. There was a lot of benefits to being involving code as a legal system for your formation. And so we come slowly to a second generation of DAOs, which are organizations that are using blockchain as a system of record for their ownership structure and some other rules. But then the second generation was stepping away from both decentralized and autonomous. And most of the so-called DAOs of 2022 are actually starting centralized at the start and starting with humans in control, not software in control. So they no longer really qualify for the original definition. So the new definition would be something like on-chain organization or organization that records ownership on blockchain, even if it is initially centralized or run by humans. Some people would say those second generation companies would require different definitions, like half DAO, half corporation or something. But the current usage of the language is they are still called DAOs.
Gotcha. So it sounds like as DAOs are evolving, from what I'm understanding from your
Yep.
old versus new definition, is that the requirement isn't that it's 100% decentralized, 100% on chain. And as we get more mature, we're actually finding some off chain involvement is important. Am I capturing that right?
Yeah, I would say when the first generation of DAOs arrived to the scene and they used it as a legal defense structure, they accidentally found three more advantages, and those were capital formation, growth, and employment. And so in capital formation, they were, instead of selling equity into investors, they were selling token to investors. And because token sales were less regulated, they were able to sell to more investors and have more people on the cap table, and new kinds of investors, more investors outside of United States or traditional countries for raising money from, and raising sometimes maybe from anonymous sources. And then also the path to liquidity and to eventual listing on exchanges was sooner. So there were created new kind of capital markets and new excitement around investing in DAO shaped projects. So essentially right now, if you raise as a DAO, you might get high valuation, you might have, sooner a shorter path to liquidity and exchange trading status and so on. So fundraising advantage is one. The second advantage is, it turns out you can actually give tokens or NFTs to early customers, your people who are actually waiting for the utility you want to bring to the market, even if you are pre-product. And then those people feel that they own part of your journey, so they're more inclined to support you on Twitter and other social media and bring you other customer referrals, use your product over maybe more established alternatives and so on. So essentially using crypto-style incentives for growth and referrals and incentivized adoption, especially chicken and egg kind of things that require some sort of supply, demand, or adoption of new standard by a lot of number of people. Essentially, it becomes a way to build network effect type business or community-centric business, especially against the Web2 kind of entrenched monopolies. And number three is, crypto is a more flexible way to employ people or to compensate people for effort. So you can either do it even programmatically, like, hey, if you help us a lot on Discord and we just measure it automatically, you get some tokens, or request for proposals or grant making programs, and maybe community decides whom to pay for and put up to vote individual sub projects, creating a community-led even mini investment funds that invest in the ecosystem around the project, and giveaways and so on. And again, because it's kind of a little bit right outside of currently regulated areas, especially where is DAO resides, what is its national kind of geographic status? Do you pay employer side taxes right now? It's not very clear. And because of that, it's kind of more flexible. It's super hard to employ 1,000 people in a day in the United States. I don't think any company ever added 1,000 employees in a day, but you can add 1,000 people contributing for crypto to a crypto-based project in a day easily. And so employment is kind of the third angle. And now this kind of half DAOs, I call them modern DAOs or flexible DAOs, or neo DAOs. So those kind of flexible DAOs, they're we might not be decentralized or autonomous on day one, but we definitely like those three advantages. We want to raise as a DAO, want to employ as a DAO, and we want to grow as a DAO, even if we're not qualifying for original definition.
I really like those three areas that you outlined around benefits, and I taking some notes as you were talking. The capital fundraising, the growth, and for incentivized adoption and network effects, and the employment, the reducing the friction for how you can bring on human resources to help you out is massive in terms of growing a company, creating a product.
Yeah, essentially you can think of that is that DAO first make it a little bit harder to prosecute So it kind of moves outside of the existing legal system, because you can plausibly say that we exist not in your current specific country. And then once you like stepped outside of the initial existing legal system, you say, okay, now we are free, so we can rethink the fundraising, we can rethink the employment, we can rethink the customer incentives. And then when the government wakes up, like a few years later, maybe we'll have a good case to show that what we actually reinvented has more benefit than harm, and then we'll ask for reasonable regulation as opposed to like, blanket dissolution or something. And so like it's a little bit of a Uber and Airbnb playbook, where you break the law first and or like go boldly in the gray area, unregulated previously under legislated areas, and then show some benefits alongside with maybe some risks, and then asks for like a compromise kind of regulation.
Totally. I definitely have some regulation questions for later on in the pod, but we'll get there. But before that, so it's kind of a two-part question. Can you talk through what some of the downsides to being 100% decentralized would be? And then also, can you give potentially examples of how a company may incorporate, and maybe we can use a company that is familiar in the Web3 and the crypto world, how a company might incorporate some of these DAO principles from a capital, a growth, or an employment perspective, but still operates from a centralized starting point?
Yeah, so the first question was what's the downside of decentralization? Well, the loss of control. So you don't know, like if you decentralize too early, before you have product or before you establish a product market fit, it's a very unlikely or very, risky to expect your community to figure everything out, especially everyone is like, part-time. People have incentives to make things work better or stay working when it's working. But if it's not working, whose job it is to make it work? So I would say this early pre-product market fit, most projects. So again, the history was that the first generation of DAOs, they were having already good work, like most of them, some of them have working protocol or something, and then they were added kind of DAO structure on top of that. So they were like, hey, we build the products in centralized way. Like Vitalik Buterin first kind of invented Ethereum and then put a DAO on top of it, not like put a DAO to invent Ethereum. And so you need to make the invention first. It is very hard to invent by community, but to govern already existing invention, that's fine. In terms of like how a traditional company would, traditionally formed company would do a DAO, like what kind of parts of DAO playbook can they use? So on capital raise, I don't think there is half measures. You either are going towards NASDAQ or you're going towards FTX, Binance, Coinbase, and Uniswap. You either want your end game to be in traditional equity or in token equity. So you either do the full switch or not. So if you do the full switch, you just grant tokens to an existing investor base team and whatnot, or promises of future tokens through token warrants. And you say, hey, we made a change. We're gonna be token traded company. In terms of the growth, that's fairly straightforward. You can create a DAO that actually acts as your kind of advanced loyalty program or customer engagement program. So what you do, you create a DAO, you give NFT-based membership to your top customers or prospective customers and other supporters and advisors. You might sell NFTs as, passes to your future next releases. A lot of people will do like a NFT-gated test flight or NFT-gated kind of beta program for a new product. And you then give them some governance rights. So you say, hey, you can collectively decide some parts of our product, maybe some design choices and namings and things like that. And then you might direct a percentage of revenue to the community directed treasury. Another good idea, if you are a creator economy company like YouTube or TikTok, you can have a DAO-shaped creator fund. So you can say, hey, community, we know we have the money. We want to give money to our best creators who produce like good videos on our platform or something. And let's community decide which creators we want to direct most money to, so that we sponsor not just the most clickbaity content, but the most valuable, most, uplifting content on the platform. So we don't want to like TikTok doesn't want to be an editor of TikTok network or YouTube or whatnot. So you can delegate certain editorial control and creator fund distribution control to your community-led governance.
Yeah.
So
Can I ask you a
please.
question on top of that right there? Like if creating a grant pool or a grant fund that is voted on by the community, I think is a great idea for like a DAO. I don't want to say tactic. I'd probably call that what's
a play.
the right word?
It's a play from a playbook.
A play from a playbook, yeah. So creating this creator fund is a great DAO playbook. Is a great DAO play. Now, is that okay if those funds are still coming from like a centralized source? Like,
absolutely.
You have
absolutely.
TikTok.
No,
absolutely. Okay,
yeah.
They go to the TikTok bank, and then the TikTok bank says, all right, we're taking 5% monthly, and we're going to deposit into this DAO, and then the community can vote with that. Like, does that still follow this new DAO
you are not
formation?
trying to impress anyone. No one sets the rules. Like every DAO-shaped project decides for themselves, and everyone decides for themselves whether they would call themselves a DAO or not. You're not there is no oversight board. There is no one you need to get approvals from. Another thing is that there are two types of, like, even if we're talking community governed kind of treasury or kind of community-led spending, there are two sub-models. One is called on-chain execution and off-chain. So on-chain execution is that you have members through NFTs or token. You have the community wallet, and in the smart contract, it is written exactly to the last detail, the voting system, including not just how people vote, but also the quorum rights, like how many people need to vote to make a valid vote and things like that. And then people vote by signing with their cryptographic kind of signatures and saying, hey, I own this NFT. This NFT is part of this thing. I vote on this proposal. And proposal is to send money from our community wallet A to like recipient wallet B. And if enough people send that to the smart contract, and the smart contract validates the signature, the current ownership status, and that they sign the vote for exactly the same proposal, blah, blah, blah. And then if the smart contract receives enough votes, like according to the vote system, it automatically disperses money from wallet A to wallet B. So that's called on-chain governance. The off-chain governance is that people vote, you collect the votes, they all signed and whatnot, and you see the vote passes, and then you call Johnny and say, hey, Johnny, we've heard like the community vote for this. Can you please send the money from A to B to the grant recipient? So that's kind of human in the loop off-chain execution. And a lot of DAOs these days, they start with off-chain execution. It's a little easier. It's like extra security step. There is a chance that, off-chain executioner of the will of the community will, say, oh, that was like a technicality, I will not proceed. But on the other side, maybe this system was hacked and someone, and then you'll see like, we don't know this wallet, we don't know why the community voted for this. We would like clarifications. So yeah.
Yeah, no, totally makes sense. And when you said everybody decides for themselves, like you don't have to impress anyone. I think what I see a lot of times as I'm on crypto Twitter and following a lot of, maybe it's influencers in the space or entrepreneurs, builders, artists, and collectors, I feel like a lot of people lean towards decentralize everything, like 100% decentralization.
Yep.
And if it's not that, then it's not, we don't want it. And what I hear from you is you're saying, we need to think more broadly about how and when to implement decentralization, because 100% of the playbook doesn't need to be incorporated in every use case.
Yes. Yeah. I think there are two sides of this debate. There are like purists or maximalists or radicals or like all or nothing people. And there are pragmatic, modern, like halfway there kind of do what you like people. I'm on the second camp. The first camp was the original camp, so they have more followers and more weight, and they've been on podcasts more often than us guys from the second camp. So very grateful to be here as a representative of the second camp. I think what I see, like I talk to 100 plus DAOs every week. Most of them are second camp. So most of them, another big difference is that most of them start NFT first. They do NFT drop and NFT release before they have token. Most of the original kind of camp one, they were token-based projects. And so that's another big difference. And those flexible DAO, like right now, nearly every new DAO project is a flexible DAO. No one is going all in on decentralization. I don't know, maybe 1 in 100.
Yeah, no, totally makes sense. Appreciate that breakdown. So to talk more about DAOs and how people can contribute to them, could you run through some different roles that people can play in a DAO? And, you just mentioned a lot of them start from dropping NFTs. So you have holders and community members, but what else can you do besides, monitor Discord and buy an NFT to contribute to a DAO? And maybe it could be nice to have an example of, one that you see out in the wild today that people could get involved in an easy way that could get their feet wet.
Yep. So there are a few ways you can become a contributor to a DAO. First is being a customer of whatever future utility the DAO brings to the world. So if the DAO is building a decentralized hotel chain or co-working space empire or a community-run soccer club or something like that, you can say, hey, I want to see that club. I want to work in this co-working space. I want to go to this resort network or whatever. And so you buy NFT as a kind of sign of hope, a sign of belief that this thing will work, and then you provide lightweight governance. So you help them shape the roadmap. That's probably, and bring more friends and helping them with network effects. So helping them build enough of early adopter kind of waitlist NFT holders so that the creators will follow on their promises and actually deliver the product that they hope to deliver. That's kind of one thing. It's like being a great early adopter. The second one is you can be a worker. So you can actually work for the DAO. There are core team roles that are not that dissimilar from centralized, where you full-time and traditional role. And then there is kind of part-time-ish I would call those part-time-ish role things like contributor loop. So there is a repeatable action that you can do for the DAO that creates value in a consistent kind of standardized way. So if it's a recruiting DAO, you refer great candidates. If it is an kind of creator economy DAO, you create content or you score or validate, do editorial control or curate someone else's content. If it is a collector DAO, you scout great new art. And if it's an investment DAO, you scout new investment opportunities, you do due diligence, you write deal memos. If it is, what another would be a good example? Like educational DAO, you produce courses or you create explainer articles, record tutorials, conduct one-on-one mentorship sessions, and so on. So there is a repeatable, standardized core action that members of that DAO expected to do, and then you do that and you get more tokens or NFTs or some sort of or status-based role-based progression and so on.
Makes sense. And so, whether you're a creator or a worker and a contributor, what about just someone who's more passive in a DAO? Is there a role for that, passive holder? And I'm thinking about with governance, oftentimes a couple of the early DAOs I was in 2021, I was in a DAO after I joined it. I bought an NFT and we had problems voting on things because not enough people would show up to vote. And, now we have some more advanced mechanisms to maybe delegate votes or have, percentage quorums, right? But should someone who doesn't want to be so active be discouraged from joining a DAO?
Well, you described one of the solutions, which is you join and then you delegate your voting power to a delegate who votes on your behalf, and maybe you consider your delegate once a year. So that way you have the control, but you don't need to exercise it daily. I think in the future people will, play a role in the 100+ DAOs per person, and most of them they will be not active on a daily basis, maybe on weekly or monthly, and then a few they would participate more hands-on, very much like chat groups or Discords or YouTube channels. You don't comment on every YouTube channel that you enjoy, but maybe you have a few that you're bookmarked or showing up on your left column or whatnot. So there would be a natural kind of pyramid of engagement for people. In terms of the passive participation, there are some barriers still from a legal standpoint, in a way that if you put money in and you expect eventually get more money out than money in, and you're passive, then you're an investor. And that thing is a security. And right now in the United States, it is illegal to publicly sell unregistered securities. And therefore, like DAOs either exclude United States or they exclude that type of scenario. So they either sell these private upside-oriented positions to privately to accredited investors through token warrants and things like that, or they exclude United States. So, or they do a more broad membership through NFTs where you might have governance rights, but the primary compensation is utility and not the financial return. So essentially, they sell it to you if you become like more a customer of their future, experiences and products, but not financial upside.
Yeah. So you see, it sounds like from the way you talk about DAOs is you do really see them as businesses and people who participate are participating because they're trying to make a return on, some kind of investment. Are people joining DAOs as basically an alternative to like venture capital funding in early stage startups, and now we can invest in this new era of companies or protocols and networks as like an early investor? Or are people joining DAOs for like other reasons but besides financial incentives?
All right, let's break it down. So the original thesis of DAOs was that they blend three roles in one. They blend the role of worker or contributor, the role of customer or consumer of utility, and the role of investor of the person who will, or owner who will receive the upside in one. So you are the owner, you're the customer, you're the worker. In reality, we're going back to kind of split. So like there are people who would join primarily to work for the DAO. There are people who join primarily to receive the upside as an owner. And there are people who join primarily as a future consumer of the future utility. So I would say the current playbook and the current security law and the current kind of best practices that what we see on the market is for customer-oriented participants, you sell them NFT with governance rights and utility rights. You tell them, you help us guide the roadmap. You will be the first to receive the product. You get discount or free version of the product. And you get the social benefits in the being in a club with other early adopters like yourself. So it's like selling the tickets to the opening night on non-existent sports team. You buy the NFT, you're part of the fan club now, and you'll be there on the opening night. So we'll give you utility of your future kind of sports entertainment and maybe viewing rights, whatnot. But essentially, we give you like the future utility, the social benefits, the governance benefits. It's a utility sale to future customers. If you want to primarily work for the DAO, then you can join maybe for free. You pay a very like symbolic, like easy like to get NFT, and then we'll pay you in crypto, or we pay you in stable coins, or we pay you in our own tokens, or we pay you in giveaways, or we pay you in status by promoting you to advanced levels so that you kind of building up your resume before getting paid. Things like that. And then if you're an investor, then you need either buy our kind of future locked private tokens primarily as accredited investors through some private channels, not really, and maybe initially as a traditional equity with token warrant attached. And then, or wait for a long period of time until we eventually get listed on Uniswap, on token exchanges like Coinbase and FTX, Binance, Huobi, and so on. Because maybe by that time we decentralized enough and like remove enough of security law enforcement, or like move outside of United States or something. And so you can become like retail can become a late stage investor.
Yeah.
So essentially, there is still no legal way to be an early stage pre-product, kind of non-accredited, anonymous retail investor in DAO style projects in the United States.
Yeah. Yeah. Super interesting, especially because I think
there is like the speculative NFT. Sorry, there is speculative NFT buy where like I'm buying a ticket on a concert hoping it will go 2x in price. But again, its ticket is primarily like utility. It's like you can play on an NFT, but the NFTs the upside wouldn't be 10x probably.
Yeah. As you were talking, it almost made me think of play to earn games that we're seeing in NFTs right now, and how some people don't want to play the game, but they want the upside in the game being used. So they're going to buy the NFT, which is the in-game character, but they're not actually going to use it. And then they have to wait for X amount of time until they can stake
Yeah, it's
it
a
and have other
speculative
people
utility
use
buy.
it.
Yeah, so it's like you can buy the tickets to the next U.S. Open in tennis. Hopefully, it will go up in price, or Olympics tickets or something like that. Yeah, like scalping, right? So this practice exists, and eventually regulation steps in or platform steps in and kind of limit the possibility, like one ticket per person, like only like limited transfers, huge commission on secondary transfers, blah blah blah. So
Yeah.
there are some tools that limit that behavior.
Yeah, I mean, but I wasn't even really worried about that kind of behavior. I was more thinking just I'm excited to see more advances in DAOs so that people can choose how they want to participate versus just having to buy the NFT. Because right now, when I see a lot of DAOs launch, you have to buy the NFT to start participating. But having those sub NFTs where you could be like a contributor NFT versus an investor NFT.
So we see way more free airdrops these days. So if you want to be an NFT based participant and you're really gonna contribute with effort and time, there is more free airdrops. They typically pre-screened. So you apply for a contributor grade NFT with like a little form saying how much work you can do for the DAO, what your qualifications are. And if the core team considers your application worthy, they will, airdrop you a free NFT.
Yeah, makes sense. And as you were talking, I had another thought around how are DAOs really different than something like Kickstarter? You mentioned there aren't a lot of opportunities to get in pre-product. And, my Kickstarter is just a popular platform that I think people know about right now. So I'm trying to draw that linkage and then explain why, they are different as well.
Well, it's a lot of similarity for the customer-oriented NFT buyers. The difference is one, governance. So the NFT sale allow you to create governance, including potentially community-directed wallet and funds. The second is resellability, so transferability. So if you bought something on Kickstarter, it's very hard to transfer. Maybe it by the time the product launches, it has more value, more certainty, but you, for some reason, have not lost interest, so it's much easier to resell. Number three is by doing NFT sale, you don't exclude the chance in parallel to sell the future tokens or token warrants to the investors. So you can be a token-based company while very much like Kickstarter doesn't exclude you from raising private venture capital in parallel. So in token world, you can sell NFTs to future customers while selling future tokens to kind of professional investors.
Yeah.
And again in the crypto world, some of the NFT buyers, I would say another expectation is NFT buyers in crypto world are more expected to do promotion for you. So you're really not really expecting Kickstarter buyers to do a lot of like social media support for a project. While the NFT, and there is also not many social benefits. So it's very rare for NFT buyers to have a chat group together and meet each other, meet other buyers of the same Kickstarter project. While in crypto, it is more common.
I wonder if that
and another big distinction is Kickstarter, I think, to this day, only allows US-based companies. And so essentially a crypto style NFT based raise you can raise as a DAO, as a company not linked to any specific geography.
Totally. Not having it linked to specific geographies, I think, is something we take for granted in the US. People in the US just have this expectation that you can launch a business you want, you can buy a product you want, and when you zoom out and realize that in a lot of places around the world that's not true, you start realizing why some of this kind of technology and structure in the crypto world is important. And I wish that we had better perspective here in the US on that. I was in a Twitter space the other day and was listening to an artist speak about how in her country she couldn't actually release music because she was a woman, but with music NFTs it allowed her to finally like release music, monetize off of it, reach an audience, and she was finding a lot of empowerment through that. Now to build off what you were talking about, the network effects and people on Kickstarter maybe not being incentivized so much to share what they're buying and what they're investing in. And a lot of that is because their upside is capped because we don't have the means to buy and sell, Kickstarter stakes. What do you think about how, like with DAOs, we're basically able to turn almost any asset into something that we can transfer and send and put a financial value on? I mean, we can send fractions of a house, fractions of a golf course, fractions of a business, and all of a sudden we have all these non-traditional investment assets. Now, do you think that non-traditional assets are seeing a rise just because of crypto, or do you think, is there a desire from consumers like us to be able to buy, sell, and trade these physical assets in a digital world?
Yeah, the desire is very strong. So people want to collectively own things and buy things and govern things and potentially have the upside of them together. I think the DAO playbook on property, like shared ownership, is evolving. That's a separate part of security law and traditional regulation, more towards the REITs, real estate investment trusts. So again, how you can form them, who can buy them, are you required to register them, what will happen if you're like theoretically outside of United States while doing that, and how things gonna be enforced. We don't know yet. So for 10 people who knew each other before, like buying an apartment together, owning, managing, renting it out, that's fine. If it's like 10,000 people buying Empire State Building together and they are non-accredited investors and they collect the money upfront before doing the transaction, so you don't yet have the Empire State Building on the balance, that's a scheme that can be easily abused. And so I would expect the regulation to be fairly active eventually so there is an evolving term around this, something like single purpose acquisition DAOs or something like that. The playbook here is evolving, but again, the safe thing is to only make it available to private accredited investors, know your customer gate first, and then you do that. So for retail people to participate in this kind of property operations, also typically I would expect that to be a 2-tier system. So the top level would be NFT based membership and maybe a KYC check as well. And so you become the kind of member of investment club, and then as a member of investment club you can fund individual property deals or individual investment or individual, I would call investment contracts.
Yeah.
So that's no longer publicly available. So it's now privately and for accredited investors only. But there are still limits, like 500 limit on private deals. So what if it's like, okay, we're all accredited, it's not publicly distributed, but still more than 500 people participating in the deal. Again, I've heard opinion that we should be more aggressive again, and explore areas previously outlined as no-go zones by regulation, just see what can be negotiated there. Others advocate for more cautious approach and trying to negotiate with security authorities up front, or innovate outside of United States first and then bring those innovations back in the United States. We'll see where it goes.
That was gonna be my next question to you, is around these laws. How fast do you think we should be moving around the DAOs? Because it's so obvious that we're advancing from a tech perspective so much faster than a regulation perspective, and that if you do wait, you said some people are cautioning on going a little bit more slow. I think you said you want to advocate advancing into that gray space faster and seeing how things shake out.
I'm not taking any public position here, so I'm not saying faster, slower. I don't want to say, hey, Yury told me to break all the laws. Publicly, I'm not taking any position on how you should explore the regulation space, but I can share what we've seen people doing or where we see more innovation happens and whatnot. So I'm more like an observer here and trying to decide for our own projects, but we are not, giving legal advice to anyone.
And are you seeing these DAOs pushing forward usually, or are they operating from a more cautious lens?
Well, there is a cautious playbook that we recommend to most people, and we think it is on a good side of things. And this is most maybe, unless you have very good reason and logic to do otherwise. And what we say is a relatively safe, or the most safe option on the table is you sell utility NFTs and you sell promises of future tokens to private accredited investors under 500 number or outside of United States. So if you only give like private, currently locked against trading tokens, not yet on exchanges, to private accredited investors, maybe alongside with traditional equity in form of warrants, as well as selling NFTs publicly and not necessarily limiting geography or KYC or whatnot, that has explicitly and only utility value, then you're in the clear. Because you're selling utility and like you're building your community, like future customer community through NFT sales, you give them, exciting opportunity in meeting each other and influencing the roadmap and maybe running a community grant program and things like that. But you don't promise them financial upside through the effort of others. You say, yeah, maybe the utility value of your NFT grows up, and maybe the NFT will be a little bit more valuable, like a ticket to a concert to a group that becomes more popular over time. But it's not like the primary reason why you buy NFT is still utility. While the tokens, you do it, very closely to previously accepted kind of equity sales.
Yeah.
So that's a safe way. And we at SuperDAO, we would gladly enable every DAO go that way. If you want to do something a little more risky, and we would consider the property acquiring DAOs. Again, the safe way for the property acquiring DAOs is you sell NFTs that grant the future utility benefits over the property. Like you can visit the property, or you can stay in the property, or you can host an event in the property. While you have a separate traditional entity that is funded by primarily, private capital that actually acquiring the property, and, so you use NFT revenue maybe for operating expenses and maybe as a down payment on the property, but you're not passing the property rights back to the NFT holders. The NFT holders only own the future usage rights and governance rights and social rights. So that way, again, so you acquire property the old way, but you provide the utility the new way.
So could we talk about an NFT community that is in the process of creating a DAO now? And I'd just like to get maybe a take on how you would advise them. So, and the one I want to talk about is the Bored Ape Yacht Club, because they have announced their roadmap 2 many months ago. And part of that is creating a DAO. And there's a lot of unknowns around it. They're a very closed lips leadership group and release information slowly. If you were advising the Bored Ape Yacht Club in this DAO creation, is there anything really big that you would point out for a successful launch and for, value to be driven to the entire community?
Well, it's a big position. I think they are one of the icons of the space. They know a lot. They know their needs of their community probably way more than me. But I'll try to talk about this.
And I would add in, just in case you're not fully familiar, is one of the things on the roadmap was like a physical location in terms of a bar. And so I personally, some takes I've seen online are, revenue shares from the bar and from merchandise can be funneled back into, the DAO to be distributed, or we'll get some kind of royalties from the player in game.
I get it. Yeah, so I'm going, so essentially what I'm trying to say is what I've seen with other DAOs. It is up to Bored Ape people, if they ever listen to the podcast, to see what of that is kind of applicable to their situation. I'm giving them the menu options, and they probably invented half of them themselves, and the other half they already discussed why they're applicable or not. Yeah. Anyway, so the first big question is, do they want a token? So as the successful NFT project, you soon realize maybe we need a token too. I don't advocate for token to appear early, but eventually figure out, all right, now if people work for the DAO, there is probably numerical value, quantifiable value of the input. And maybe if we're going to acquire the property, maybe the royalty rights at some point not enough to fund it. So maybe we want to raise more capital, or maybe we want to have more collections. And so maybe, again, it would not be the Bored Ape Club that would be tokenized, but rather the parent company. I think they have some, Yuga Labs or something that behind it. So you might tokenize that. But eventually, so the question is, you will get a token at some level, at some, involved organization. Oh, all right. So the second consideration is you probably want that token to be non-tradable for some time. So you only sell it to private accredited investors, you give it to some core team members, and you start giving it out for the effort. So if people like scout something, you support something, you produce something, or ecosystem partners, so people who accept those things as avatars or as game characters or something, or grant benefits in their own ecosystem for the same holders, then you do that. All right, so let's say you have private token. The next question is you probably need multiple entities. It's not like a single entity. So you have a DAO, which is a community side of things. So the community, the NFT holders are the community members of that. That thing can have a community wallet. They might have some lightweight operating staff, kind of core team members who primarily do like community operations. And it has community governance over that community wallet and so on. Separately, you probably have the operating entity that is more like executive branch. So think of the community side as the parliament of your place, and executive branch more like ministers and president and whatnot. So the executive branch is more like, hey, we actually do work in a more centralized way. Maybe we acquire properties, like we build a bar, or we host events, and we organize annual conference, or we sign partnerships, and we do biz dev, and we write software, and we maintain website and things like that. And then there is basically a master agreement between the DAO and the operating center, where DAO can be decentralized and operating center can be centralized. Eventually, there can be multiple operating partners. But yeah, and that agreement is like a traditional paperwork that is a contract between two entities. And it describes the flow of money, and it describes the areas of responsibility. So, for example, you can say that if there are any remaining apes that were never sold before, then basically what happens with the primary sales, whether they go to operating entity versus community wallet. If there is secondary sales commission, again, what's the split? What percentage of the secondary sales goes to community community wallet versus operating partner? Is there any annual fee or monthly fee for the operating partner to continue do the work on behalf of the community? Is there a contract of what is expected for operating partner to be delivered for the community partner? Yeah. If the community votes on certain things, does the operating partner take commitments on implementing those, executing those decisions, like naming rights and whatnot? Is there a transfer of IP property from like, hey, you can do derivative work of your NFT, you have full commercial rights? And so the kind of IP transfer from like an artist to the operating entity, and from operating entity to the NFT holders, and so on. Yeah. And then there is also, if there is an upgradable smart contract for the NFTs, then again, who can upgrade it, how it can be upgraded. Another one is security and recovery. Let's say someone holding an ape and they can prove with some documentation that they got hacked and the ape got transferred. Is there any kind of override or veto right? So you can, irreversibly burn that stolen ape and reissue maybe a replacement ape or something. So essentially, is there any security center? I don't know. Again, this goes a little bit against Coda's law and whatnot, but again, some compromises can be made between, security side and the decentralization side.
No, that's a great breakdown you gave. I was taking so many notes during that, just how it starts from the token, then you think about non-transferable tokens, the community wallet, the operating entity, the master agreement.
Yeah, when we say non-transferable, it needs to understand is a token by design, both ERC-721 and ERC-20 are transferable, but they can be locked in a way that they are currently non-transferable, like temporarily non-transferable, and they be locked for like indefinite amount of time.
Yeah, yep, makes sense. And your last point about security and recovery, even recently, we're seeing a lot of talk about how DAOs handle, managing people within the DAO if they go against community standards.
Yeah, can you ban an NFT member or like create a blacklist or something? Yeah.
Yeah, and it sounds like what you're really recommending is you need to have those kinds of details written out in your agreement so you can make decisions, off of a clear
both agreement, both a traditional agreement between DAO and operating entity, as well as sometimes in a smart contract. Yep. So the smart contract, for example, can maintain a list of the NFTs that considered to be tainted or like broken or stolen or something. And so if, say, a third-party app saying, hey, we let every Bored Ape member to enter our club for free, you can say, hey, please, can you respect our blacklist as well? So if someone comes with a stolen ape, please don't let them in.
Yeah.
So essentially, if you convince the other parties to not only respect your NFTs but respect your blacklist.
Yep. Thanks for making it this far into the episode. I hope you're learning a lot. We recently launched a new Discord channel within our server for the Unstoppable podcast. In the channel, you'll find a cool surprise. So head over to the Unstoppable Domain server, find our podcast channel, and check it out. And you'll want this password when you're there. It's Discord NFT. That's Discord NFT. That's all I'll say for now, so stay tuned for more passwords in future episodes. See you in Discord. Now, let's get back to the pod. All right, so I've got some rapid fire questions for you as we get to the end of the podcast. You go with that?
Sure.
All right, first one is, how many DAOs will there be one day? And maybe one day is in 5 years.
Yeah, over a million for sure. I would say 5 years, maybe over 10 million. Yeah, we're very bullish on this.
Wow, that's quite a lot of DAOs. What will the biggest DAO failure be? And do you think that will cripple this movement?
Yeah, we're in huge favor of DAO failures. We think we need to see as many as possible in a way that we need to make it super normal. It's like startups are failing and no one is upset. It's normal. Like if we will be afraid of failures, that would be very few DAOs will be created. So what we need though is a right dissolution process. So if the DAO fails and it has any remaining funds in the community wallet or some other way, like other property owned, or like how we distribute it back to the members. So like, what's the process to close the DAO? It should be as easy to start the DAO as it is to close the DAO. So I would say because as soon as the DAO fails, it really frees the energy of the membership and participants and creators to create a new one. Because otherwise, everyone is tied to their first idea. Maybe it's not the best idea. They want to move on.
100%. Okay, next question is, what will the biggest DAO be in a few years?
That's a big one. If everyone would know, you would probably want to buy their private token. Very hard to say. I would say some of the marketplaces, maybe some of the social networking, kind of messaging, anything related to attention. So creator economy, advertising, content, those things seems to be scaled. So basically a counterpart or a version of Facebook, Google, Amazon, Apple, but also a version of, IRS or American Army or something. So a version of government structures that we see today, NASA, I don't know, things like that. So National Science Foundation, things like that. So United Nations, yeah, that would be a good one. So yeah.
Okay. And talking about, big DAOs, who do you think is going to be the next brand or major company from the centralized Web 2 world that's going to start dabbling in DAOs? And, it could even be a sector of business that you think might start getting involved in next.
Yeah, I would add one more thing. I think one of the biggest categories for DAOs would be banking. So maybe a DAO is a bank would be a big one. So in terms of interplay of traditional and DAO space, my prediction is every traditional company will have a DAO division or department or DAO type entity or DAO account. In a way, I said there are three advantages to DAOs: fundraising, kind of customer-led growth, and employment. I think for traditional companies, 2 out of 3 is very important: the customer-led growth and kind of reinvention of loyalty programs, and crypto-style employment and fluid employment. So I think every company will have, and also a crypto asset management. So every traditional company will have a wallet, will hold some Ether or Matic or something, and they will pay in crypto to some freelancers, and they will do grants in crypto, and they will grant NFTs to customers and sell NFTs. So I would say every traditional company will be crypto active. And since they will be crypto active, they will have a crypto version of their company or crypto side of their company. So every traditional company above, 1 million in gross income will be a DAO. It will have a DAO type operation.
Yeah, and that goes back to what we were talking about at the beginning of the podcast. All right, and my last three questions for you is my 1-2 Web3. Who's a influential Web3 creator, entrepreneur, or artist who inspires you?
Yeah, I will name one of your previous guests, Chao Wang from Alliance, recently renamed from DeFi Alliance. I think Chao is one of the deepest thinkers in the space, maybe not the loudest, but whenever he talks, I'm listening.
I love that. And a favorite NFT of yours?
I would go back to CryptoKitties. I think they were the pioneer. They kind of inspired the standard, and they were very active on mechanics, how those evolve over time, and breeding stuff and whatnot. I think a lot of ideas that we reinvent or rediscover now can we go back to CryptoKitties.
Love it. And lastly, in 5 years, what's the craziest thing that we'll be doing in the metaverse that we're not even thinking about yet right now? And it doesn't have to be DAO related.
We will pay taxes voluntarily. So right now, like one of the kind of advantages or options on the crypto world is you don't know what kind of taxes you owe to whom and how to pay them, especially if you exist outside of the United States, and especially if you operate as a business. So maybe we just get to learn how to pay taxes on crypto as individuals, but not as an organizations. And let's say you're an organization and your presence in any individual country is not the biggest one. Do you pay income taxes? Do you pay payroll taxes? And if so, can you set your own rate? Can you decide by yourself whom you pay them to? So basically, DAO economy becomes a serious tax base, but the question is for whom? Like, who is receiving taxes from DAO economy? And whether DAOs will be voluntarily decide what tax rate they want to pay and how. And I see some glimpses of that where DAOs start saying, oh yeah, we feel too bad not to pay any taxes. Let us decide by ourselves whom and how we're going to pay some taxes.
Yeah. Wow. I don't even want to sit in the room of the government officials who have to start talking about DAOs and taxes. I think that would be
government officials would be very excited about this. Like, let's tax all of them. The question is how it will play out.
Yeah. I think KYC is going to be a bigger factor in terms of associating that with your identity, and then that could start clearing some things up as that takes place. All right, Yury, I want to give you a chance to, talk about your, SuperDAO, anything you want to plug here, what you're building, where it's going, how people can get involved, and, where they can follow you.
Awesome. Yeah, I'm pretty active on Twitter, Yury Lifshits in one word. SuperDAO is SuperDAO_CO. SuperDAO_CO. DM us anytime for any DAO ideas, DAO help. We are actively advising, we're hosting workshops. Generally what SuperDAO does is help new DAO projects and existing traditional companies and existing DAOs to set up a smart contract for their NFT collection, for membership kind of benefits and governance and wallets and whatnot. We help evolve it over time, extend in a modular fashion, and we provide also an interface, a member space for your DAO members where they can have member directory, newsfeed, treasury dashboard, and the compensation system for contributors. So if you want to start a DAO, you have a DAO idea, it's a good idea to apply for private beta on superdao.co, and you'll get invited to our workshops, and then we'll help you write your smart contract and launch very soon.
Brilliant. Well, I really appreciate all the insight you brought today. I mean, so much knowledge around DAOs. I was taking notes the whole time. I'm going to listen to this back and try to digest more of what you were going on. I mean, the playbooks you laid out for how centralized companies can integrate, DAO principles and tactics into what they do, how you talk about everything from the legal to the taxes. It was really, really interesting, and I appreciate your time. So with that, I was
excited to be on the show.
For sure. Thank you, everybody, for listening to the Unstoppable podcast. My name's Josh, and I just want to say thanks so much. Please check out our Discord. Leave a review on Spotify or Apple Music if you learned something today, and I'll see you online. We'll see you next week. Peace out.
Bye, everyone.
I hope you enjoyed this episode of the Unstoppable podcast. If something we said today resonated with you, please subscribe, leave us a review, and share this with your friends. And remember, this conversation doesn't have to end here. Tweet us your thoughts, ideas, or questions at Unstoppable Web. Thank you so much for listening, and we'll see you next week.